Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday the 3rd of November. And it looks as though the market's recovered a bit actually from the budget, in the sense that we bounced off the 200-day moving average around 80.70. That was one of the scenarios we were looking for. The better one, the worst one, was that we'd have to head to the floor of that falling red May trend channel just below 8,000. But so far, looks as though we're out of the woods, in the sense that we closed back above September and October support, or the former September and October support. So above 81.60 or so, looking for this market to get back within that rising trend channel from this time last year, around 82.40. And then above that, the possibility of heading back to 8,400. The other thing to remember is that the beginning of November tends to be the place to be buying the market, whether it's here or anywhere else. And that normally leads to the run-up to the year-end rally, and perhaps even a move going into January. So this is the time and the place. In terms of the FTSE, though, if we do break back below the 200-day line, then a sub-8,000 target could be on its way, but that would only really test the August support that we already have in place. Moving along to the DAX, and here you can see that we bounced off the 50-day line, closed the gap down that we had on Thursday, and above the floor of the gap there, well, the top of the gap there, 19,200. Looking for this market to retest the best levels of the year. Overall, 20,500 could be the target if we hold the 50-day line by the end of next month. Worst case is that we've got to test the floor of the channel or even the 200-day moving average, but hopefully we are not looking at such a scenario. Next up is the Dow, and here, looking forward to the presidential election. I must say I'd be surprised and amazed if Trump actually prevails, but an end-of-day close back above the gap there, 42,100, could take us back to the highs. Otherwise, we've got the chance perhaps of a move down to the 200-day moving average, a bit like the FTSE, around 40,400, but perhaps set up there for a rather volatile week. Moving on to Bitcoin, where the hopes have been, or that we would stay above 70,000. We haven't done that, and in fact, didn't quite get up to our June resistance line either. The current situation is that we're probably looking at the probably looking at this market heading down to the 50-day line and mid-October support there, just around the 65,000 level, even if we can then rise again. But clearly, there's an element of depending on what happens in the US this week. RSI still above neutral, 50 to 53, so that is a positive. And I suppose the other thing to note at the moment is the presence of an uptrend line there from back in September. We want to hold above that, ideally at 67,500. Moving along to gold, which I believe had the rug pulled a bit on Thursday. Managed to hold the support there, but still have the chance of hitting the floor of that rising June trend channel there, 27.20, the level there. That was also the mid-October support, so hoping that we'll stay above that ahead of a move up to the top of the channel there, 28.40 by the end of this month. Moving on to the pound, and here I suppose it is key in terms of the reaction to the budget. What you can see here is that we had a bit of a dip below the floor of that rising trend channel, but at least while we can get back above at 129.40 now, then there is a chance of a rally back towards the 130.50 area and basically the end of October resistance. Worst case is we're going to test the 200-day line again, which we've done previously back in August, and before that 128.10. So hopefully that would mark the bottom of any pullback. Moving on to the stocks, and looks as though Avacta has been given a reprieve in terms of its potential move back down to the 40 level. Nice bounce on Friday, really getting us back above the old gap level at 52 pence. Above that, hoping for a move back towards the 50 and 200-day moving averages at 60 pence. As you can see from the post-July period, the 50 and 200-day lines have been resistance for the shares. This stage, early and end of day, closed back below Thursday's low around the 48 pence level, really suggesting that we've got to go down to 40 pence again. Moving on to Emmerson, which perhaps wrong-footed the bears and the bulls with the price action that we've had. One of the strongest setups that you can have, which is a gap down and then a gap up off new lows. And here, that bear trap island reversal, as I said on Friday, above the top of the gap there, 0.54, looking for up to what we were initially looking for, resistance on the way down at 0.8, which has already been done above 0.8, looking for the 50-day moving average up to 1.3 pence by the end of this month. But as I said, very strong price action there and bullish divergence as well. So lower lows for the end of October, but higher RSI trace. So very interesting indeed. Interviewed Mike Whitlow on Friday, otherwise known as Doc Holliday. We already had a positive look to the charts here at ECR Minerals. I said we've had multi-tested support points there above, at and above neutral 50 in the RSI window. We had the unfilled gap to the upside earlier last month, and we had a gap higher on Friday, which the shares managed to close above, as well as closing at above the old October resistance, 0.34. The longer we can stay above 0.34, the greater the chance of move to the top of that triangle there from February. 0.43 the target there by the end of next month. On the downside, only really an end of day close back below the floor of the gap there, 0.31, delaying the upside scenario. On to Atlantic, which has been a difficult customer, but looks as though it's bouncing within a broadening triangle. A little bit of bullish divergence coming in there for October as well, but key here is that we can close above the October gap there, 11.5 pence above that, looking for up to 14.8 pence at the top of the triangle by the end of this month, and enjoying that U-shaped turnaround the shares have delivered. On to first class metals, which I managed to forget due to advancing senility on Friday, but we already looked at this as a breakout, trendline breakout there. The July line there at 1.8 pence. Above that, looking for, well, we were looking for the 50-day line there at 2.35, which I think we just missed. And the best case would be up to 3 pence by the end of this month, while we're above 1.8 pence. Moving along to a stock which has been well flagged here with the break of the 200-day moving average. It's average rather, and very strong candles since then. I think the triumphant day there on the price action was the 28th of October, where we had a very strong hammer candle, key reversal to the upside on Friday. So it looks as though the bulls are still with the momentum there, looking for 5.7 pence by the end of this month, or even sooner, at the top of that upper parallel of the rising trend channel base that we have had since March. And obviously don't expect to see anything lower than the previous October peak there at 4.25. It's above 4.25, looking for at least 5.6 or 7 pence on Firering. Moving on to Itaconix, which is and has been looking interesting from a charting perspective. Gap through back below, from below the old April-May resistance there at £1.27. Above that on an end of day close basis. Not only are we looking for the 200-day moving average at 155, but up to 1.80, well, rather £1.80 by the end of the year. The only thing missing here is an end of day close back above the 50-day line, I suppose, at £1.40, and we don't want to see anything back below the floor of the gap there, £1.23. On to MicroSalt, where the false flag RNS of the 18th of October worked really well for the bulls. We gapped higher at the beginning of last week, and we were looking for initially the 50-day, the second target there was the 200-day moving average at 75. Third target there, the red resistance line there from August at 82 pence, and above 82 pence, looking for just the 100 to 103 area. But in fact, today we can upgrade that to as high as £1.20, the top of a notional broadening triangle there from May, and hopefully we can hit that by the end of this month. Ideally, we want to stay above 82 pence, obviously, in the meantime. Moving along to something which is maybe a surprise rebound situation, Orcadian. Not quite sure why the shares would rally here, but can't question the break of that resistance line there, around 6.5 pence. Above that, looking for at least the 200-day moving average at 9 pence, and best case up to 12.6 pence at the top of that broadening triangle from back in April, but maybe it's some relief over the situation in the North Sea, and good to see the shares back above the old July-August support there at 6.6 pence. Moving on to Pantheon, which has behaved itself according to what we wanted it to do. We got the initial target there, the top of the rising trend channel base at 21.6 pence, next target up to 26 pence by the end of this month, or hopefully much sooner, which is the upper parallel of that rising trend channel base. 50-day line there rising very nicely as well. Moving on to Rome Resources, which is, with the seller out rumour proved to be right, below 0.13 pence, and now it's just a matter of seeing how far the shares can climb after the unfilled gap to the upside that we had on the 22nd of October. What we want to see now really is the shares with an end-of-day close 3.48, and then that would suggest the next level up is up to as high as 0.63 by the end of this month. That's the upper parallel of that rising trend channel there from back in the summer. Onto a stock which I didn't think I'd be looking at again, which is Red Rock Resources. Here, the possibility of a turnaround with the gap close buy signal that we've had. So the shares closing above the October gap down day that we had on the 22nd, and above that level at 0.041. Looking for a move up to top of the falling trend channel there at 0.067 as soon as the end of this month. MicroSalt is doing well, then one would expect its parent, Tekcapital, would do well as well. And in fact, this is doing very well in the sense that we've got both the 50 and 200-day lines rising. We're in the run up to a golden cross, which should happen by the end of this month, and the top of the broadening triangle there from back in February, heading for basically 13 pence by the end of this month, while we're above the 200-day moving average at 9 pence. On to the last two, and the first one, a stock which I feel that might do well with the government's public sector gravy train, rising trend channel here on the Totally chart, looking for 13 pence by the end of this month, while we're above the 50-day line at 8.8 pence. Finishing off with the United Oil and Gas, which seems to have been rather boosted by the confirmation that the company is leaving Egypt. We already had our target there at the 0.25 level, which I'm very proud has been not only hit but exceeded. Next target here should be up to the line I'm just drawing at the moment, which is an upper parallel of that broadening triangle. That's currently heading for around the 0.34 pence level, which we're looking for by the end of this month, especially while we remain above the 200-day line at 0.21. That's it for me today. More updates during the week.